Hey everybody, this is Jim at SP500chart.com. It's May 20th, 2013, about 4:30 in the afternoon. And the markets were down a fraction today. You know what that means? They'll be up big tomorrow. No, I'm just kidding. I don't know that. But we're going to take a look at the chart. Frankly, it's a little discouraging when you're dealing with a market that just seems to be, I don't know, just inflated with helium. It just has this really strange penchant for going up. By the way, I was looking at a little solar stock. I was thinking about buying some late last week. I said, no, let me see if there's any sign of strength in this stock. The one I was going to buy was up 70-something% today. Is that a good thing? Is that a good thing or a bad thing? Think about it. Why does a stock go up 70-something% in a day? But I had some other winners today that didn't quite make up for that. But let's take a look at the chart after I read this story to you. And that is, the website and the video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. So I said kind of jokingly, the S&P or the markets were down a little bit today, so that means they're going to be up big tomorrow. Well, you know, it wouldn't surprise me because we ended the day right back down on our gray support line. So let's watch this line, see if it holds tomorrow. If it holds, then where can it go? Because we temporarily got over our red resistance line fairly early in the day, but then gave that little bump over it back up. So here we have one of those situations where we end up with two lines that have a date that is about midday on May 23rd. So you see what I'm saying? Either we got to be over this red line by then, or we're going to be underneath this gray line. Again, and I won't ramble like I did over the weekend. I apologize for this weekend's video. I was dog tired. I had the basement had flooded. I had to get my wife and younger son to the airport, and it was just a really, really, really hectic and stressful day. So, if this line breaks, then I think we're going to come down and we're going to get down to the 1650 level. And we got a number of little potential support lines underneath us if this breaks. We got about 3 of them that somewhat line up here. And the 2 that I really think would be the most significant, interestingly enough, it's not this orange one, it's the green and the blue. And the reason is these 2 lines are bona fide for real support lines, meaning they've been creating bounces in the market. This line is not a support line. This line is a broken resistance line that is upsloping. When you have an upsloping resistance line that breaks out to the upside, you can't count on that line working as support. It may, but you don't see it with the same regularity that you see a broken descending resistance line. So, this was a broken resistance line that you now cannot really count on that much as support. I may have misspoken because I'm still a bit stressed and sleep deprived. So, interesting to note, where in this chart do you see a trend line that is going down? There aren't any. There just aren't any. We're not looking for any back test of broken resistance that we've taken out on the way up. We are really and truly in an area of the chart where there is no line that we're approaching that is down sloping. If we back out from it, it makes perfect sense. We are over the top of everything that is significant. So in that regard, we're sort of in uncharted territory, even though we're charting it. So I think the same thing would go now as has been going for the past number of weeks, and I hate to be redundant again and again, but watch this green line. That's really, I think, the gist of it. Watch this green line. When it breaks, then we start to look for an area where we would expect to see a bounce. Until it breaks, we don't need to even be thinking about a bounce, because we're not bouncing. We're just keep going up. So if this does break, there are a couple things that could happen. We could bounce on this blue line. We could come on down and oops, didn't mean to erase that. And it could come on down to that yellow line that I'm going to have to put back on the chart. Hold on. So there's our yellow line back on the chart. That has been serving pretty well as support since the middle of November, with only one brief 3-day dip underneath it, which made this nice little inverted head and shoulders that touched off this last rally of over 125 points in the S&P. So guys, let's watch this line. If that breaks, watch this line. If that breaks, then watch this one. But until this green line breaks, hang with it. Stay where you are. And if you're short, my heart goes out to you. This market is not being kind to the short seller, has not been in a very long time. So at some point we will end up with a pattern that we can trade on, but right now I just don't see it. If you have any ideas and if you think I'm missing something, please shoot me an email. But as far as I can tell right now, there's no real classic topping pattern. It looked like we may have been seeing one here form just under 1600, but once we got over 1600, we had to abandon that head and shoulders top that I thought might form there. So, but by the way, when you do chart reading, don't be afraid to change your mind. If the chart shows you something new, there's no virtue in sticking with an old idea that has been now called into question. Charts aren't perfect. Chart readers aren't perfect. But one thing that can almost guarantee a bad experience in charting stocks or in charting the markets would be the inability to take a fresh look at things on a day-by-day basis. So I try to do that. And I've had a few people that maybe respond and say, hey, you changed your tune. So, well, the chart's different. The chart is different this week than it was at the end of April. We're looking at something new now, and that happens all the time when you're charting stocks and when you're charting indexes and ETFs. So there's your video for May 20th, 2013. I'll say it again. We're looking kind of extended here, but I think it could extend on. So let's just watch these support lines, see what happens when they break. Until then, take care. Thanks for watching. Thank you for your support. And let's see what the markets serve up for us with the rest of this week.